All right, welcome everybody to the Let's Learn with Advent series. My name is Advent, obviously. I pretty much post my watch list in my channel pretty much every day for the following trading day. Essentially, for those who are new to this, the way I like to organize or structure these sessions are essentially the first 30 to 45 minutes. I'll be going over any questions that you guys have or that you guys want to ask me. And of course, you can type in questions whenever you want in the chat, and I'll get to them after I finish, whatever question I'm on or whatever point I'm on. And then the last 15 minutes or so, I'll just go over I'll say like a major lesson that I want you guys to understand and, contemplate on and reflect on. Today's lesson that we'll go over towards the end will be, like the mindset and the mentality and and having proper expectations when it comes to trading. Cool. So with all of that being said, you guys can start asking questions now, or I'll just jump into the questions that some of you asked before we hopped in here in the questionnaire. Also, as you guys are typing those questions, little introduction about myself, since I always forget this for those who don't know me. I've been trading for about 4 years now. I started in 2020. I started trading penny stocks, and then from there, regular stocks. And then from there, I discovered options. And about 2 years ago, I discovered futures, and I've basically been trading futures and options since the last 2 years. More aggressively, I've been trading futures since last year, once I understood it and, got the strategy down packed for it. But that's pretty much all I trade now, futures and options. So we can also go over that if you guys have any questions on that. On a day, I mainly day trade. I do swing trade, but not as often as I used to. If I am swing trading, then it's mainly just selling premium for those who are familiar with options. For penny stocks, how much did I begin with? So I started with about 1,000, and then I shredded like 500 because I didn't know what I was doing. And then from there, I got my first mentor, and then I went from like 1,000. I put in like 3,000 or 4,000 of my own money, and I made about 45K in the first year or so. And then from there, I went into options and futures and stuff like that. All right, so M. Castro has a question. Looking at the Tesla chart, and from what I was seeing, was on the daily chart, if it closes above 180, if it would be good to long. Let's see. I'll go on TradingView just because it's a little easier to see the chart compared to Thinkorswim. People don't really know how that works, but it's usually cleaner for me anyway to have these things on TradingView. All right, so if it closes above 180, so before I get into charting, for those who look at my watch list, it is based on the Strat by Rob Smith. Highly, highly, highly recommend you look into that because it's been one of the greatest things that I've ever discovered since I started trading 4 years ago. I learned the Strat about 2.5 years ago at this point, and it's been like the best thing I ever discovered. It just simplifies trading so much. But anyway, something to note, it's not necessarily when the price closes above if it'll be good to get in. With the Strat, you're getting in as soon as the candle breaks. So for example, let's say we're looking at the daily time frame. If you're looking at the daily time frame to get in for a long, and I mainly day trade, like I mentioned, I don't really swing trade like that as much. If I'm gonna day trade this and looking at the daily time frame, I'm gonna go long above that level, meaning as soon as the next candle opens and it breaks above this level, I'm buying calls. And if you're going to be looking at some targets, I would target the body of that previous candle, the wick. Then you can target this body as well if you want. And then you can also target that wick. So you can have those as targets for your long side. Based on the ATR, it's probably not going to hit this target up here, but it'll probably hit at least two of these. I mean, 2 or 3 of these based on its ATR. So if you are looking to go long on Tesla, again, I mainly day trade. I would use this move as a day trade, not really as a swing. If I were to swing, I would go long above this wick, and then I'll target that body of the previous week, obviously this wick, and then you can have like an in-between target if you want. Excuse me. So that's how I would swing trade Tesla if I were going to. My stop loss, if it's for a swing, one of two places. You can have it in the 50% of the previous candle, which will be this one, or the bottom of this candle, or the bottom of whatever the trigger candle is, whichever one you prefer. And if I were to swing this off the weekly, I'm getting at least 30 days to 45 days out minimum. Where would you recommend starting for someone brand new to trading? Great question. Also, ProTech, great question about the mentor. I'll get to that next. If somebody's new to trading, what I would highly recommend is the Candlestick Bible. I wish I learned that when I first started trading. I kind of just figured it out as I went. But the Candlestick Bible, in my opinion, it'll give you a really good foundation to how to read candles, like basic market structure, understanding like higher highs, higher lows, trendy markets, choppy markets, things like that. So for technical analysis wise, the Candlestick Bible, definitely recommend. You could find a bunch of free copies online. If you do need one, I can just post it in the chat. Just let me know. But yeah, definitely Candlestick Bible. If you're new, also focus on paper trading. I'll get to this later on with like the expectations to have with trading, and I'll go a little more deeper into it. But what I find new people doing is they get focused on the money and like, oh cool, all right, I made a trade or two, let me put my real money in. It's good to understand that trading is a marathon, it's not a sprint. You want to take your time. You don't want to rush anything, because when you rush anything, or if you rush it, the process, then you're going to get into trouble. Like for example, for me, when I first started, my friend called me. He's like, hey man, put money into Boeing. That Boeing was like $100. I'm like, all right, cool, whatever. I put $200 in it. The next week, that thing doubled. I was like, oh, this is the stock market? This is easy. I put in 1,000. I got shredded. I lost $500 on the next trade. I'm like, all right, I got to learn this, because money can be made with proper guidance and education. So definitely Candlestick Bible, having proper expectations and being patient. You want to paper trade. If you don't know what paper trading is essentially just like trading the real markets with fake money. So for example, on TradingView, they offer a free paper trading that you can use. So if you do use TradingView, when you bring up your chart, just go to trading panel, scroll down, go to paper trading, and now you have fake money that you can trade with. What I would say is that if you are going to paper trade, it's good to reset your balance. Where's the balance place? I always forget how to change this. It's always good to have reset account. It's always good to use a balance that is realistic to what you're going to be using in real life. So if you're going to be using like $1,000 account, reset your paper trading to 1,000, Because what I found people would do sometimes, they'll start with like 100,000, and then they'll get desensitized to the big numbers. So if they're using $100,000 and putting like $10,000 in a trade, and they're making like 500, 1,000, 2,000, when they go to their regular account, they're like, oh, I'm only making like 20, $30. I don't really care about this. Let me leverage even higher, which is what you don't want to do. So if you're going to be paper trading, you want to start off with the amount that you realistically are going to be starting with as well. So TradingView has it. You can basically paper trade anything. If you use Webull, Webull has a good paper trading feature, and you can also paper trade options on it, which is great. If anybody uses Thinkorswim or has Schwab, Thinkorswim is great. They have their own paper trading platform there, which is excellent, and you don't need to pay for data, which is great. But yeah, those are ones that I would say are good to use, at least that I've had experience with personally. Also, study a lot. You want to make sure that your system, whatever it may be, is sound, that it works, it's consistent. You don't want to be like, cool, I made money for a week, let me go real money now. You want to at least get a month of data to see what works, what doesn't work. I would even say maybe like 2 or 3 months of data, depending how many trades you're taking and things like that. Let me know if that makes sense, Joey, before I continue. Cool. No, definitely. And also understand that building the system on the technical side of trading, like, strategy, that's the one component. When you get into like real live money, that's when the mental and emotional component is going to come, that you're going to have to work on as well. For me, while I do teach people how to trade strategy wise, my biggest focus is really just getting people's mindset and mentality and emotions correct when they are trading. Because one thing, and I'll go to your question next, ProTech, and I'll segue into this. From my first mentor, he just taught me strategy. He never taught me like, hey, when you start using real money, your emotions and your mind and all those things are going to start catching up with you, and you got to make sure to take care of that. He never taught me that, so I kind of just had to figure it out as I went along. But yeah, in the sense of mentoring or like having a mentor, I would say I'll answer this question in two ways, and I'll give my non-biased opinion first. Yes, you can definitely learn how to trade without a mentor, but the biggest question that you have to ask yourself is, how fast do you want to complete whatever it is that you want to complete in your trading journey, right? Because yeah, you can learn by yourself at your own pace, and maybe be profitable in a year or 2 years or whatever it may be, or you can spend the money and then learn from a mentor who has experienced all those things already and can guide you properly, as opposed to you like fumbling and figuring it out as you go. In my opinion, a mentor is a fantastic tool to have to help you on your journey. It could be for anything, with trading, in your life, really anything. I've had several mentors in my trading life. I have several mentors in my personal life outside of trading, and it's been like the biggest game changer that I've ever discovered. Like, if I knew about mentors when I was younger, I would definitely have done it way before now. But yeah, definitely having a mentor can propel you a lot quicker. I worked with I worked with many people, but one story in particular, I started with this individual last September. Yeah, last September. And in about 3 to 4 months, he was already profitable. And to this day, since last September, he'll consistently make between like 500 to like $1,000 easy. But again, with the proper guidance and such, that can help you get to your goal much faster. At this point, him and I just talk here and there, but he's pretty much got it down. I don't need to like walk him through anything, which is great. But yeah, all in all, definitely having a mentor, highly recommend. The question you just have to ask yourself, do you want to sacrifice time or do you want to sacrifice money? And whichever one is more valuable to you, it can help with your decision a little easier. And while you're typing that, I'm going to pull up some questions that people had. Hopefully, the questions that I'm about to ask or that I'm about to answer, whoever it was that asked that, I would hope you're in here because I want a little more clarity for some things. Before I get into the questions, ProTech mentioned I ask about mentors because I have been approached by some people, but they seem sketchy. I don't mind a mentor, but I have a busy life. Um, so, in my experience, when I first started mentoring people, I did reach out to people in the beginning, but then over time, as I started to get more of a foundation built for my own, like, the coaching business besides like my trading business, I don't message people anymore directly. I have everything there for people to message me. So the biggest thing I'll say to that is if you feel sketched out about it, then it's probably best that you don't, get mentored by them. The reason I say that is because, if you're feeling like off put by that, then that's probably a sign. Um, so something to keep in mind of. Like for me now, instead of reaching out to people, I say, hey, look, I have a 30-minute free call where you and I can talk and see if we can work with each other. And it works both ways. Because, I'll have those 30-minute sessions with people, and sometimes I may not want to work with them for whatever specific reason. And, they may not want to work with me for whatever specific reason. So, ultimately, if you don't feel like, or if you don't feel comfortable with them, then, don't bother, in my opinion. How much time would you say you need to be studying, practicing per week starting off? I would say as much time as you can give it. When I first started, was I may have gone a little overboard, but I was like very like it blew my mind when I made money by pressing a button. I probably did like 5 hours every day for like months at a time. What I would say is, have a good balance between, like studying, your life, your family, etc. Because my experience, I did go a little overboard where I kind of like neglected um, like friends, family, stuff like that. But I did tell them what I was doing at the very least. But um, I would say have a balance, like, dedicate, all right, 2 hours of my day is going to be for studying or reviewing charts or whatever it may be. So, any specific amount of time, it really depends on your schedule. But I would say, an hour to 2 hours a day is a good starting point. And then if you have a lot of free time, you could do more if you want. But do not, you know, don't let it get unhealthy because I've been there and it's not a good place to be in. I'll tell you that from experience. Unconventional question. Dedicated groups who do calls together. What are your thoughts about those groups? Do you mean in the sense of like when people like trade together? Gotcha. It depends. So, in my opinion, I don't trade with people anymore. I used to, like in my group and other groups. But what I found for me personally, I don't, I can't concentrate because I tend to talk a lot. And if somebody gets me starting, I'll just talk their ear off and I'll lose focus on what I'm doing. But also, like I mentioned, it's distracting. If you don't trade the same style or strategy, it can be, it's not really conducive for your trading, in my opinion. If it works for you, hey, definitely do it. For me, it doesn't work for me. what I've learned since I started trading. Everybody that I work with or that I teach, I make sure, when you're trading, you are trading. Not you and your buddies, not you and your friend, not you and so and so. It's you and the chart, and that's it. Because I like to build self-sufficient traders. Um, while of course it's good, take signals from other people and things like that. Ultimately, I just like to build self-sufficient people because that's what didn't happen to me when I first started. I kind of have to develop this over time. Um, but I would say if you are new to it, you can see if it works for you. Again, in in my experience, it would work better if everybody had the same strategy and everybody was on the same page. Because when me and my buddy were trading together, he would trade ICT, I would trade the strat. So if I'm gonna go short, he would go long and things like that, and it'll be conflicting. So then I start doubting myself, be like, oh, should I get into this? And then I would be right, or vice versa. Um, hey, Castro, thanks for coming by. Yeah, you'll definitely catch the replay. I'll post it in my channel later tonight. Um, but yeah, I would definitely say you can try it out, see if you like it, see if it works for you. If it does, hey, do not let me dissuade you. As I always say, do what works. What works for you may not work for me, and vice versa. What's your suggested portfolio size you recommend when starting? Uh, hmm, it depends what you're trading. If you're trading like regular stocks, if it was me, I would probably start between like 1 to 2,000. If you're trading options, I would probably start with 500 because it gives you some leeway to get decent contracts. Because what I find people doing is getting like out the money contracts because they're cheap. But with a $500 account, let me bring up Thinkorswim. With a $500 account, what I like to do when I was starting out with options is trade IWM because you can get like a 1 to 3 DTE like at the money or even in the money. And look, the 208 strike and the current price is 208 and change. It's still cheap. It's like $70. That's pretty good in my opinion. So you don't have to spend so much money. And with the VIX being low right now, you're getting low premiums, which is good as well. So for small accounts, I like IWM. It moves fluidly like SPY and QQQ. It's not as hectic as SPY or QQQ in the sense of the volatility. It moves slower, but it's pretty relaxed in my opinion. So $500 is good for options starting out, and for regular stock, if you're gonna go that route, I would do 1,000 to 2,000, since you'll be putting up more money up front for whatever it is that you're trading. Have you heard of incorporating AI within stock trading? Um, kind of. Can you give me an example? Gotcha. Do you mean, I guess to clarify a little better for me, do you mean like using like algorithms or like, flow? Um, yeah, the AI stuff, I have to look more into that. I haven't really thought about it too much. For me personally, um, I just focus on price action, like I mentioned with the strat, because price is going to tell you what what the market wants to do. if I were to use like any AI tools or anything like that, it would just be like to add on top of my already established conviction or confluence for the trade. But I wouldn't base my trade off of like whatever AI or whatever it is that I'm using to like get ahead of the market per se. Yeah, it's like you, if it works, like I mentioned, like we're gonna get after this, I'm gonna get some questions that people ask in the questionnaire, and I'll speak on that, like using flow and stuff. But if it worked for you, hey, definitely do it. For me personally, it just adds too much, like to me, it complicates it. At least for me personally. So I like to just keep trading as simple as I can. Medium asked, with your program, are you doing more individual shares or is it more options? What do you mean exactly? Like when I teach people, or do you mean like me myself, like how I trade, like what I trade? If you mean more so like what I trade, I mainly just trade options and futures now. I don't really bother with regular stock. I invest in regular stock, sure, but I don't trade it like that. In the sense of like what I teach people, that depends what they need help with. You know, some people come to me for options, some people come to me for futures, some people come to me for crypto. It really doesn't matter. Whatever they need help with, I've traded it. I traded Forex maybe for like half a year or like a year. Uh, a family member that I know, he'd been trading it for 10 years, so he put me onto it. But I haven't traded Forex in a while. Once I discovered futures, I'm like, this is way better. Don't have to deal with the spreads or anything like that. And you can trade the Forex pairs or the future equivalent of them anyway. So to me, it's just more efficient, in my opinion. While you guys are typing, I'm going to get into some of these questions that some people asked. And if you are here, please let me know, just so I can better answer this, because there were some questions that it's a little vague. Where could I learn more about what options and futures are? YouTube is great. Um, Google, obviously, you like Investopedia can give you like a bunch of info about options and futures. Um, I have a course on options if anybody wanted to look at that. I'll post a code at the end for a discount when we're done here, if anybody's interested in that. But yeah, you know, YouTube, um, Google, all great resources to use. Just curiosity, you guys thinking of doing shit coins at all? A lot of hype behind, lots and lots of money to be made. Or probably not because too risky. I can't answer that question because I don't really do call outs like that. Um, in the sense of like the main administrators of this group, that's probably a better question for them. But me personally, I just make my watch list based off of either for futures or for options or regular stock, whatever people want to trade based off my watch list. But I don't call out any like crypto moves like that. And I mainly just trade Bitcoin anyway. When if I were to trade Bitcoin using crypto futures, but like you know the shit coins and things like that, what I do works, so I don't really care to go otherwise. For regular stocks, are you talking long-term holds or day trading? It depends. My watch list is mainly for day traders, but you can also look at it and see if it could be a potentially if it could be a potential swing trade. Sometimes, very, very, very rarely, I'll put a swing trade idea in the watch list. And for those who look at my watch list, every single setup there is for a day trade unless I specifically say it's for a swing trade. But yeah, for the watch list, it's a day trade. You can trade shares, options, whatever you want on it, depending on whatever it is that you trade. Let's see. I'll go through these questions real quick that some people asked in the questionnaire. If you guys are here, that'll be great, so I can get a better idea of what some people meant, because some of these are vague. Um, this will be over. The question that I asked was, what has been a big challenge for you this week slash month in your trading? The first one that somebody mentioned was being greedy for more gains and not taking wins. Um, that ties into like the mentality and controlling your emotions and or managing your emotions more so, because we can never be free of emotion. But essentially, you have to understand that it's not about hitting the home runs. It's about being consistent. If you're out here trying to hit a home run every single day and you're losing 8 out of 10 trades because you're not taking profit, you got to take a step back and have a talk with yourself. Because let's say you took profit on those 8 out of 10 trades and you would have been up, let's say 5,000, but you trying to go for home runs, you're only up like $500, right? So always understand that there will always be another trade. There will always be another opportunity. Excuse me. Another opportunity to make money. So if there's like a runner position, like if you buy 4 contracts and you take most of them off, but you have 1 contract left, hey, sure, leave 1 running, keep it moving, and just make sure not to let it go red. I'll tell you that, because people will be up 200-300% and not take profit and let it go like -50. And I've been there, trust me. So I'm telling you from experience. One of my rules is never let a winning position go red. As soon as that hits target 1, I'm moving my other positions to break even or slightly above. So definitely take your profit when it hits targets. And again, there's going to be more trades. You'll be making more money. And like I mentioned in the beginning of the class, this is a marathon. It's not a sprint. If you're trying to be a millionaire overnight, you're shooting yourself in the foot. So having proper expectations is key. Somebody mentioned selling too early. I'm using Robinhood. Is there a way to put a sell line like in Webull? I cannot answer that question because I have not used Robinhood in like 4 years since I started. So what I would probably do if I were you, I would just move everything from Robinhood over into Webull and just use a better platform. A limit sell, that I'm not sure. There might be. I would hope at this point, since I've used it 4 years ago, that there is a limit sell. That should be like basic order entry, but there should be one for Robinhood. Again, I'm not sure. I haven't used Robinhood in 4 years. From what I remember, there is a limit that you can set, a sell limit from when I was using it. But yeah, it should be there. Exactly where it is in Robinhood, that I'm not sure. I've only just used Robinhood for like the first few months I was trading. Then I moved to Webull, and then I use Thinkorswim now. Somebody mentioned a challenge for them is not having a strategy. If you are in here, like I mentioned, study up the strat. If you go into my channel, go to the pinned section. I have videos and like resources to get started in the strat. It makes trading very, very simple. It tells you exactly when to get in, exactly when to get out, and exactly when to do nothing. So you're not really guessing when you should be getting in or out. It's laid out all right there for you. So the strat is definitely a great one to have in your tool belt. It's based on price action anyway, so you can just apply it to any instrument you want. I've used it for crypto, Forex, options, futures, literally whatever you want, really. Somebody mentioned knowing when/what price to set a stop loss, when to dollar cost average, etc. I'll answer this question in 2 ways. So for me, I do not average down at all. If I get into a trade, it's either going to lose or it's going to win. That's it. I do not average down. To me, that's silly. Once you get in, the trade is either valid or it's not. It is what it is. At least based on the strat, the way I trade it and the way most people trade it. We don't average down. We just get in and we wait. In the sense of knowing when and what price set a stop loss, again, it depends on your strategy. So if we're looking at, let's say the strat, for example, let me get rid of all these lines. Actually, we'll do a live example since we can use Bitcoin. Let's go on the 1 minute, so we're not here for 50 hours waiting for a setup to appear. So with the strat, essentially what we're doing is we're waiting for a candle, either low to break or the high to break to go long or short. So let's say for the sake of the conversation, we got 30 seconds left on this candle. Let's look for a potential short, even though this is probably going to be going back up. But I just want to show you guys as an example. Let me get this trade order ready. We're going to do a sell stop. And I'll just put it on the chart for now, so then I can just edit it. So if it breaks this low, if the next candle breaks that low, I'm going to be going short. And let's do 500, and it already passed. Let's see if it gets me in, even though it already passed the entry. That's a little tight. Let's move that up. So if it breaks that low, which again it already did, but so with the strat, once you get in, your target is either going to be the wick or the body of the previous candle. So in this case, let's use the wick. And then your stop loss can either be above the trigger candle, which is above that green 2 that we're at now. It could be 50% of the previous candle, or it can be the setup candle, which can be up here above this candle there. And now we just wait. It's either going to hit my target or it's not. And there we go, a winning trade. Congratulations, easy peasy. The strat makes it super simple to trade. So hopefully that helps you with your stop loss and such. And then the next question somebody asked was figuring out a trading plan, entry, exit, and stop. How to realize a play is good to go or it isn't. Again, that depends on your strategy. As the example that I just gave for the strat, in this case, let's take the long side. So if it breaks the top of that candle, it'll turn into a 3 up, which is a bullish engulfing bar. I'll have probably my stop loss here, and then I might take profit up here at the body. And then we just wait to get triggered, and then we got the 3 up, and now let's see what happens. Again, it's either going to be a winning trade or a losing trade. In this case, I'm leaning bullish because this looks like a TTO on the 1 minute time frame. If you don't know what a TTO is, that's okay. That's like a strat term. Essentially, it's when the market's bullish, you get a pullback, forms like a triangle if you want to look at it that way, and then it continues higher. Or in simple terms, it's just a pullback to continue in the direction of the trend. In the sense of Bitcoin, we're on the 1 minute, so I'm just basing it off what I'm seeing here. So we got the pullback, broke the previous highs, broke the previous lows, and now we might reverse back up and go for these highs. We'll see what happens. And then in the sense of when a trade is good or bad, again, that depends on your strategy. For the strat, let's say, if the daily and the 4 hour is green, I'm not going to be on the 1 minute or the 5 minute looking for a short. To me, that's just silly. You're going against the trend. You want to be trading with the trend for the most part. So if you use a strat, I can definitely better answer that question. If you don't, then it'll be a little challenging for me to do so. But really, it's just based on your strategy and your setup and things like that. What I would say is, whatever your strategy is, get a handful of setups that you like to take, whatever they may be, and see which ones work, see which ones don't work. And then from there, you can determine if it'll be a good trade to take or not, based on the percentage that it has won in the past. So keep that in mind. That can help. And some other questions that some people asked. So do you use buy stop or sell stop every time to enter your trade and just do it on higher time frames? Same method, just higher time. Yeah, pretty much the same method, just higher time frame. In this case, when I'm trading options, I'm not really using stop orders. I'm either buying the ask or I'm just buying market if the spread is super tight on the contract. I wish I could just set my stop for options to get in, but it doesn't work as efficient as like this. The buy stop in this case is just because as soon as it breaks that high, then it's going to automatically get me into the trade, as opposed to breaking the high and then I have to market buy or set a limit at the entry, and the trade can leave you in that case. Get rid of that trade for now. Question that somebody asked, and again, this is a little vague, so if you are in here, please let me know. They said what to look for in a stock chart. I don't really know what that means. Again, it's pretty vague. Do you mean in the sense of like looking for a stock to trade? Again, it's pretty vague. Because if I'm looking at a chart, let's say like basics wise, right? Whoops. Let's go here. Looking at Bitcoin, let's look at the daily. The daily for me would be bullish. So what I would be looking for in this case is looking for a reversal back to the upside to get in on the trend. So that could be an example of what I would probably be looking at. My idea for Bitcoin would probably be something like this. Oh, whoops. Where is my arrow? There we go. So for Bitcoin, I'll probably look for something like this. We bounce in this area and then we head higher. Of course, that's not guaranteed, but that's what I'm thinking for Bitcoin. So it should bounce around the 64.5K area. I'm not going to go into too much. How I see that is just experience and, screen time. Somebody wanted to go over flows, insider buys and sells, real-time news on stocks. I am in. So flow, I used to use flow like maybe a year and a half ago. Actually, no, like 2 years ago. I maybe used it for like 2 months. For me, it just complicated my trading. It didn't really make it easier for me personally. So I stopped using it. Same thing with insider buys and sells. Like I would see like an insider buy and then I would buy and then the stock would go down like 30%. So, and vice versa. Now, if I'm already in a long trade and then I see insider buys, hey, that's great. For me anyway. So, while I do consider some of those things, I personally don't care much to use them. Again, what I've learned over the last 4 years is, all right, now that I know all this information, how can I make trading simple for me? How can I simplify all the knowledge that I've gained? And for me, it's just, looking at price action. What is the price telling you? Because some people be like, oh, I'll give some examples. Let's say like Nvidia, right? And that's definitely not Nvidia. There we go. Let's say Nvidia, right? Let's go on the daily so we can see this gap. After earnings that happened in May 23, pretty much last year, and we got that mega gap up, people were shorting it because they're like, oh, it's going to fill that gap. It doesn't make sense to be this high. Meanwhile, instead of fighting the trend, you could have been making a lot of money on the way up. So for me, I always pay attention to what price is telling me and what the chart is telling me, and then I'll use fundamentals for fundamental analysis is like insider buys, sells, news, things like that regarding the company that you're investing or trading. But for me, I just focus on technicals, and then I'll use the fundamentals to like give me more confluence if I need any, which is rare. But again, you always want to be paying attention, and if the chart says long, I'm going long. If it says go short, I'm going to be going short. You don't want to be like, oh, well, it shouldn't be this high, so I'm going to short it. Again, whoever's been waiting for this gap to fill, they're going to be waiting for a long time. I'll tell you that, because it's been a whole year, and we're nowhere near these levels. So focus on the charts, not on your thoughts. I'll tell you that. Somebody mentioned strat combos. For the strat, if you are new to it, don't focus too much on all of them. Just focus on like 2 or 3 setups until you get comfortable. Then you can move on to other ones. So like 3-1-2s are good, 2-1-2s, actionable signals like hammers or reverse hammers or shooters that they call them in the strat world are good. But you don't want to like memorize all of them, and you don't need to. Just focus on a few starting out and then go from there. You don't want to overwhelm yourself. Again, you want to keep trading simple. You don't want to make it complicated. Before I continue, you guys have any questions? Cool. So the next thing somebody wanted to go over was reading charts and fibs. Fibs, for those who don't know, there's Fibonacci retracements. Reading charts, again, the more screen time you do, the better. And again, reading charts, it's a little vague. If you are in here, if you can tell me what you mean by that. Like, do you mean like market structure? Do you mean see if something's bullish or if it's bearish? Again, a little more context would help me answer that question better for you. But in a really, really, really basic, I'll give you a little lesson on market structure for higher lows. When higher lows are occurring, that's letting me know that the market wants to head higher. What is a higher low? If you don't know what that is, as the name suggests, we have a low right here. We have another low, but it's higher than the previous one. So we have a higher low. Then here, another higher low. And then over here, we get the little pullback, same thing. Another higher low. And then right now, what's happening here, if this reverses, like if the next candle goes up, then to me, this will be another higher low. This is telling me that the market is heading up. As opposed to, on the opposite side, if the market's trending down, you're going to be getting lower highs and lower lows. So for example, over here, low, higher low, and then it was making higher highs, and now it's making lower highs. This is still a higher low, but then price is heading lower. So we get another lower high here, and forgive my mouse handwriting. Then we get another lower low. Instead of making a low that's higher than this one, it made it lower. Right here, same thing, lower low. And then over here, lower low. So the market was trending down. However, once we get that higher low set in, it's telling us that the market is reversing. It wants to head higher, which we see here. You can also see it a little clear, like if I were to put line, like the line graph, you see these low points, these pivot points are higher, 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 as it keeps on going up. And then over here, lower, lower, and then lower. So that's one way you can read market structure. If you aren't here, let me know if that helped. If you watch the replay, let me know if that helped as well. Cool. We are close to the end, but we can go like 10 minutes over. That's fine. I was going to ask if you guys have anything else that you want to go over before I get into, you know, like the mindset, mentality, things like that to come that you should have in your trading. Cool. I will continue. So when it comes to trading, like I was mentioning earlier, you know, it's having the proper expectations, right? You're not going to be a millionaire overnight. You're not going to be a millionaire in a month. You really want to take your time with it. So when you approach trading, you really want to study a lot and get screen time. Even if you don't take trades, just look at the chart anyway. So you can start seeing specific patterns and things like that, because the market is not random, it's programmed. You'll see the same patterns day in and day out. For example, let's look at Nvidia on the daily. We get a W. We get a retracement near the center of the W. We head higher. Let's look at IWM on Friday on the 5-minute. Right here. You get the push down, move up, we get the W, we get the pullback, and then we go a little higher. In this case, it didn't continue going higher, it failed and headed lower. But these same patterns you'll see every single week when you're trading. You just have to know how to spot them. So, moving on before I go off on a tangent about that trade setup. You know, having proper expectations, like I mentioned, you know, take your time with it. When I first started, I was like, all right, I was making like $160 a day in my old job, like 3 years ago or 2 years ago, plus commission or whatever. So I'm like, all right, let me start somewhere small. Let me try to make $50 a day. Cool. Made $50 a day. All right. Now that I got my account a little bigger, let me see if I can make $100 a day. Cool. Got to 100, then 150, 200, so on and so forth. Until I got comfortable, I was confident that I could leave my job and just do this to sustain myself. So, you know, take your time with it. Have little like milestones and little goals for you, but don't try to be like, all right, I'm gonna make $100 today. I'm gonna make 2,000 next week. Like, again, you want to take your time with it. There's no rush, and when you rush it, that's when you get in trouble. One thing that I will mention about having like monetary goals in terms of like daily goals, I like to look at it more in the sense of, instead of like my goal for today is $500, it'll be more so my goal is to perform well. What does that mean? Performing well would mean following my trades, following my plan, following my rules, and following what I said I would do. Whether I win or lose, that is not up to me. That's up to the market, Remember, you do not want to go into trading with a certainty-based mindset, um, in the sense of what we may be used to in our regular job. Because in our regular jobs, for the most part, you work hard, you make connections, you'll get promoted, so on and so forth. But in trading, it doesn't matter how much work you put in. You can still lose a trade. That's normal. It is what it is. It's to be expected. So you always want to go into trading with the goal of performing well. And when you perform well, the money will come from that. You also want to understand that trading is based off of probabilities. Again, nothing is 100%. I'll admit, I lose trades every single week. On Thursday, I ended red for options. It is what it is. The biggest thing here is just narrowing down your setups and really taking the best ones. So that way you're taking the high probability setups as opposed to the poor ones. And that can be accomplished by, doing back testing and all that good stuff. And then, as opposed to how many times this specific setup appears, out of 10, 20, 30 times, how many times is it losing? How many times is it failing? Cool. Is it winning more than 70, 75%? All right, I'm going to add that to my playbook. That'll be one of my good setups that I look for. So, you want to always be thinking in terms of probability. And you never want to go into the trade saying, this is going to win, so on and so forth, because you're already shooting yourself in the foot. Because if it doesn't win, then you're going to be in your head. Then your emotion's going to pop up. And then you're going to revenge trade. Then you'll go on tilt. And then you'll over leverage and all that other stuff, which is what you do not want. Because once you're in tilt mode or you get emotional, it's hard to get yourself out of that. If you didn't, if you don't have like strategies or techniques in place to slow down that process or get you out of it. I'll give you an example. For me, once it hits 12 noon Eastern, I turn my charts off. Because for me, trading during lunchtime is not profitable, and I will overtrade. I already know myself. So as soon as 12 noon hits, I'm turning my charts off. I am not looking at the chart because I know for a fact if I leave my computer open or my charts open, I'm going to want to take a trade if I see a setup there. So you need to know yourself as well. Some people can leave their charts open and they're good. I'm not one of those people. I'm going to turn off my chart as soon as I'm done. Because I'm going to be enticed to, take another trade. And you don't want to give a penny back when you're done trading. So definitely keep that in mind. One thing that I would say as well that people get a misconception of is people like to look at trading, or not trading, but like emotions with trading in the sense of, once you get rid of your emotions, then you'll be a good trader and blah, 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 blah. I'm telling you now, it is impossible to get rid of your emotions. We're human beings. We cannot rid ourselves of emotions. They're a part of us. They're a part of our being. It is what it is. The biggest thing is really managing your emotions. For example, I lose trades. I get annoyed. But I have the understanding that losing is part of the game. It's part of the business. It's to be expected. It's how you handle yourself when you get in those moments. So, and again, I still have those thoughts. I just have my system in place where I just do something else as opposed to letting those thoughts win. So I'll lose a trade and I'll be like, all right, let me put another one on quick so I get that money back. But it's like, no, because I'm no longer trading if I do that. I'm gambling and I'm here to trade. I'm not here to gamble. So, and of course, emotional techniques like breathing exercises, so on and so forth, so you can bring yourself down from the emotional spot. As Randy Howell mentioned, he was one of my mentors for like the mindset mentality side of trading. For him, it's like, developing the trader's mind, because as humans, we are not programmed to like experience be in probability based situations, right? We evolved thousands of millions of years to work on certainty. If we're hanging out in the Stone Ages and we see a bush shake, we're not going to be like, oh, yeah, it's all good. It might just be a squirrel. It's like, nah, that's going to be a bear, saber-toothed tiger, whatever it may be. I'm out of here. I'm running. Same thing that happens in trading, especially when you're using your real money. Because, money is like our shelter, it's our food, it's all these things, it's our livelihood. And when our safety is threatened, our brain is immediately going into that fight or flight emotional response. So it's going to do everything it can to get you to mess up and stop doing what you're doing. So definitely develop more of a trader's mind, as Randy calls it, and you'll be good. Let's see, what else? If you don't have rules, highly recommend getting rules, because rules are going to tell you a lot about yourself. What works for you, what doesn't work for you. My first rule is I do not trade when I'm tired. My second rule is I do not trade in bed, because I used to do that like 3 years ago, and it messed me up. I'll literally wake up 5 minutes before market opens and then lose. And then I'll be like, why am I not making money? It's like you're half awake. You don't know what's going on. So if I'm not at my computer or at my desk, I'm not trading. So definitely have a set of rules. If you don't journal, highly recommend journaling. Journaling is going to give you data. And with the data, you can better refine your trading. Without that, you're kind of just flying blind and kind of just, keeping it in your head. You want to have it on paper. And I'll show you guys an example. Let me bring this up real quick. Give me 1 sec. All right, so let's say for my playbook, right? I have a winning trades and losing trades folder, so I know what trades suck and I know what trades are good. So let's say, for example, like the W that we were talking about, right? Let's bring this up here. So I have a image explaining the move, how to spot it, when to get in, when to stop out, when to take profit, so on and so forth. So in this case, I have it laid out with data and with images to tell me this is a good setup, this is not a good setup, this is that. And then you could determine if that trade works for you or not, amongst other things, when it comes to your setups. And also journaling, it'll help you figure out what rules you need and so on and so forth. Because it wasn't until I sat down with myself and I was like, bro, you're messing up. You got to get yourself together. And I'm like, all right, what's a common denominator of the last month or two that I've been trading and I've been losing? I've been tired and I've been trading in bed. Cool. Let me add that to my rule list. Perfect. Now I know no trading in bed, no trading when I'm tired. And, of course, other rules there. Like, having my watch list ready, which I do the day before so I can have more time in the morning to prepare, eat, do my routine, all that good stuff. So when I get on the charts, I'm ready to go. Cool. I'll end it there because if you guys let me, I'm going to keep on talking for like another hour. As we wrap up, what was everybody's biggest takeaway of today's session? Definitely, the emotional game is invaluable. Um, One of the biggest things that I'll say, like I mentioned, trading or the strategy is one component of trading. The next big hurdle is the emotional part, the mind part of trading, and the discipline part. Because, you know, in the group that I learned the strat from, in my original, well, not my original mentors group, but like my strat mentors, there's still people when I started in that group that are still having trouble. And what I've noticed for them, excuse me, what I've noticed for them is they still haven't got down pat like their disciplines and their emotions and things like that. So, it doesn't matter how good your strategy is. If you don't have discipline, it's not gonna matter. If you're losing more than you're winning, then you're just working backwards. So definitely emotional and mind part is a big component of trading. That's pretty much why I started coaching to begin with, because I'm like, I've never met somebody like mentor wise in the trading world that taught like the mindset part of trading and things like that. So I'm like, you know what? Let me be that guy. So here I am. But anyway, yeah, definitely get that down packed. Elle mentioned the strat trading. Yeah, highly recommend the strat again. Really, really good. Was a big game changer for me. So definitely study it up. For those seeing the replay or for those in here, let me bring this up. Like I mentioned, if you ever did want to work with me or look into my courses or whatever it may be, you can use the code Divine at checkout for $50 off. I put it in the chat, and I also put it in the description of this replay for anybody who's seeing it afterwards. But yeah, I appreciate all of you for coming out, asking your questions. Any other big takeaways or any last things before we head off? Hey, my pleasure, Risk. Appreciate that. Hey, absolutely, ProTech. Thank you for asking your questions. You had really good ones too. And the people who are still here, and the people who see this in the replay, you know, I like people to be present, obviously, but also, the better the questions that you ask me, and also when you are here presently, it can, it helps me better help you. Because like for the other questions, for some people who didn't attend, you know, asking me what to look for in a chart is pretty vague. There's like a million things I can go over when it comes to looking at a chart. So, when you guys are present or can give me a more detailed question, it can better help me help you a lot more. And I'll leave it at that. Anyway, thank you again for all of you for coming by, asking your questions. I'll post the replay once it finishes processing. Excuse me, in processing. Probably in the next hour and a half, 2 hours. So like by 11 Eastern, you'll see it in my you'll see it in my channel there. Anyway, appreciate you guys again, and enjoy the rest of your night. And I'll see y'all bright and early tomorrow. Later.